MrBeast just bought a bank, not a brand or a fintech startup, an actual regulated financial platform with 7 million account holders. Weeks before the acquisition closed, Beast Industries received $200 million from an Ethereum treasury company. 16 days later, a Beast Industries employee was referred to federal regulators for insider trading. Then, a United States senator sent the company a formal letter demanding answers. There was no public response. This is the story of how the world's biggest YouTuber entered banking. Jimmy Donaldson built something that has no precedent: 491 million subscribers on a single YouTube channel. Nearly every video he has published in the last year crossed 100 million views. As of April 2025, 39% of his viewers were between the ages of 13 and 17. The vast majority were younger than 25. Those are not estimates. They come from a verified audience measurement tool, cited in a formal United States Senate document dated March 23, 2026. For most of the last decade, what Donaldson sold to that audience was entertainment, then chocolate, a meal kit, then a reality competition show on Amazon Prime Video that became the most watched unscripted series in the platform's history. Each product followed the same logic. The audience is the distribution. Feastables, his chocolate brand, generated $215 million in revenue in 2024. It launched in 2022 with a YouTube video. That model works. The question the paper trail raises is what happens when the product is not chocolate, but a regulated financial platform backed by an Ethereum treasury company, operated by a company that a sitting United States senator has formally described as primarily an entertainment and consumer product company with no reported prior experience offering financial services, investment services, or banking products. That question does not have an answer yet. What it does have is a document trail. And that trail starts earlier than February 2026. Before the acquisition makes sense, the mechanism has to make sense. When a creator with MrBeast's reach launches a product, the subscriber base functions as pre-qualified demand. The relationship predates the transaction. Beast Industries made this explicit in the Step acquisition press release on February 9, 2026. The combined organization would leverage Beast Industries' extensive audience reach to deliver financial tools. The audience is the asset. The product changes. The distribution mechanism does not. Now extend that logic to a banking platform. Step was founded in 2018. By the time Beast Industries acquired it, the app had raised more than $500 million in total funding from investors including Stripe, General Catalyst, Coatue, Charlie D'Amelio, and Stephen Curry. It had more than 7 million registered users. It offered FDIC-insured deposit accounts, a Visa debit card that reports to credit bureaus to help users build credit history, peer-to-peer transfers, savings tools, and an investing platform. That is a fully built financial infrastructure. Beast Industries did not need to build it. They bought the keys. Jeff Hausenbold, CEO of Beast Industries, said in the press release, "Financial health is fundamental to overall well-being, yet too many people lack access to the tools and knowledge they need to build financial security." That statement is not a business plan, but the trademark filing is. In late 2025, before the Step acquisition, before the Bitmine investment, Beast Holdings LLC filed for the trademark MrBeast Financial. The filing covered an expansive range of services: credit cards, microloans, investment management, insurance, and cryptocurrency payment processing. Crypto trading through decentralized exchanges was included in the reported scope. Step is the only financial services offering Beast Industries currently operates. Stay with this, because what comes next is where the paper trail gets specific. On January 15, 2026, Beast Industries announced a $200 million investment from Bitmine Immersion Technologies, described in his own press release as the leading Ethereum treasury company in the world. Hausenbo said publicly that Beast Industries looked forward to exploring ways to incorporate DeFi into our upcoming financial services platform. DeFi, decentralized finance, is the sector of cryptocurrency that operates outside traditional banking infrastructure and is, as of this script, almost entirely unregulated at the federal level. 26 days after the Bitmine investment closed, Beast Industries announced the acquisition of Step. One source covering the deal described it as the company's first official move following the Bitmine announcement, framing cited directly in Senator Warren's March 23 letter, footnote 38. The sequence: Ethereum Treasury Company invests $200 million. CEO announces interest in DeFi financial services. Company acquires a regulated banking app with 7 million users that previously offered crypto trading and shut it down in 2024. Whether those events are connected by design or coincidence is a question the filings do not answer. What they show is that all three happened within 26 days. Now, the Evolve Bank problem. Step does not hold its customers' deposits directly. Like most financial technology companies, it is not a bank. It describes itself explicitly as a financial technology company, not a bank. To provide actual banking services, Step partners with an FDIC-insured institution. That institution is Evolve Bank and Trust, based in Arkansas. Step's website tells users, the FDIC provides deposit insurance to protect your money in the event of a bank failure. Your deposits are automatically insured to at least $250,000 at each FDIC-insured bank. That statement is on the record. Senator Warren's letter asks Beast Industries to explain how that disclosure complies with current law. Because FDIC insurance applies when the insured bank fails. It does not apply when the fintech intermediary fails. That distinction is what determined whether thousands of people got their money back in 2024. In May 2024, a financial technology company called Synapse Financial Technologies filed for bankruptcy. Synapse had been operating as an intermediary between customer-facing fintech apps and their bank partners, including Evolve Bank and Trust. When Synapse failed, customers could not access their funds. A court mediator determined that up to $96 million in customer deposits could not be located at Evolve or the other partner banks. The shortfall existed for months before the bankruptcy. Customers were not notified, FDIC insurance was unavailable because it was Synapse, the intermediary, that failed, not the bank. That is the bank Step currently partners with. In the same year, the Federal Reserve brought a formal enforcement action against Evolve for, in the Fed's own language, deficiencies in the bank's anti-money laundering, risk management, and consumer compliance programs. Also in 2024, Evolve confirmed that customer data had been released on the dark web following a cyber attack on its systems. Senator Warren's letter asks Beast Industries 9 specific questions about its relationship with Evolve, including whether Step was aware of the Synapse fallout, the Federal Reserve enforcement action, and the data breach before the acquisition closed, and if so, what due diligence was conducted. Beast Industries' deadline to respond was April 3, 2026. No public response has been documented. Here is where the story stops being about one company and starts being about a pattern. The mechanism that Beast Industries is now operating, creator audience converted into financial product adoption, has run before. The infrastructure and the regulatory gap it exploits are not new. What is new is the scale. In October 2021, Logan Paul promoted CryptoZoo to his 23 million subscribers. The product was a blockchain-based game with a play-to-earn model. Buyers purchased NFT eggs, hatched digital animals, earned a cryptocurrency called Zoo. Paul said on camera that his team had been building it for over a year. The game never launched as promised. In December 2022, YouTuber Stephen Findyson, known as CoffeeZilla, published a multi-part investigation into CryptoZoo that drew tens of millions of views and documented the gap between what was promised and what was built. A class action lawsuit was filed on behalf of investors who lost money. In October 2025, a federal judge dismissed the class action, ruling that Paul's promotional statements, including his claim that CryptoZoo would be a really fun game that makes you money, constituted puffery rather than legally actionable fraud. The court found the plaintiffs failed to prove Paul personally profited from the failed project. Paul's defamation lawsuit against CoffeeZilla, filed in June 2024, was scheduled for jury trial on May 4, 2026. That case, at the time of this script, remained unresolved. The mechanism was the same. Audience trust converted into financial product adoption ahead of any regulatory framework designed to govern it. The people promoting the products were not registered investment advisors. They were not required to disclose conflicts of interest the way a licensed financial professional would be. The audience acting on their recommendations had no structural protection a customer of a regulated financial institution would have. The question Senator Warren's letter is really asking is whether that gap is about to get significantly larger. In October 2024, blockchain analysts at Luke.io published findings linking Donaldson to over 50 cryptocurrency wallets, with transactions totaling approximately $23 million between 2021 and 2024. The report alleged a pattern: investment in projects during pre-sale periods, public promotion to Donaldson's audience, liquidation before price declines. Donaldson denied wrongdoing. He stated that third parties manage his cryptocurrency investments. No charges were filed. The Luke.io methodology has not been independently verified by a regulatory body or court. The record is disputed, and that dispute is part of the record. What is not disputed is the timeline. The allegations published October 2024, the trademark filed late 2025, the Bitmine investment January 2026, Step acquired February 2026. What connects them, if anything, the paper trail does not establish. It only shows the sequence. Now the insider trading event, because it matters for what comes after. On February 25, 2026, 16 days after the Step acquisition closed, Kalshi, the regulated prediction market platform licensed as a designated contract market by the CFTC, announced a disciplinary action. A Beast Industries employee named Artem Kaptur, working as a visual effects editor, had placed approximately $4,000 in trades on markets related to MrBeast videos using material, non-public information. Kalshi described his trading success as near perfect, given the low odds of the markets he traded. Kalshi fined Kaptur more than $20,000, 5 times his trading gains. He was suspended from the platform for 2 years. The CFTC issued an advisory citing the case as a potential violation of law and called regulated exchanges the first line of defense against insider trading. Beast Industries suspended Kaptur, opened an internal investigation and fired him on March 4, 2026. CEO Jeff Hausenbold notified employees of the termination by email. The company's statement said it has no tolerance for this behavior, whether by contestants or our own employees, and cited a long-standing policy in place against employees using proprietary company information. That policy is on the record. So is the question Senator Warren raises in her March 23 letter. 2 footnotes after the Kalshi incident is cited. She asks Beast Industries to describe, in writing, its current compliance operation, its employee manuals and standard operating procedures, and its organization chart highlighting all individuals with compliance or legal functions. She asks because, as she documents in her letter, when Jeff Hausenbold was promoted to CEO in the latter half of 2024, specifically to professionalize the company, Beast Industries lacked a chief human resources officer, a general counsel, and an anonymous internal reporting mechanism for employee misconduct. Hausenbold was brought in to build the infrastructure a company of that scale requires. The question Warren is asking, with receipts, is whether the infrastructure is actually there. In September 2025, 5 months before the Step acquisition, the Children's Advertising Review Unit, the industry body for advertising compliance in children's media, operating on the BBB national programs, issued a formal ruling against MrBeast YouTube LLC and its affiliate Feastables. The ruling identified multiple compliance failures. Advertising content in video descriptions and pinned comments was not clearly labeled as advertising. A blind taste test video showing Feastables outperforming competitors was determined to mislead viewers into believing the results were from a valid independent test. The video has since been taken down. Sweepstakes promotions failed to properly disclose free means of entry, failed to adequately filter participants under 13, and in one instance could have encouraged a viewer to purchase up to 10 chocolate bars per day to maximize their chances of winning. The ruling also found that Feastables' website collected email addresses and phone numbers through a full-page pop-up that repeatedly directed visitors to join the crew, with data shared to third parties, without obtaining verifiable parental consent as required under the Children's Online Privacy Protection Act. Karu's inquiry concluded that some of these practices may have violated COPPA, the federal law governing the collection of personal data from users under 13. Beast Industries cooperated with Karu's recommendations. The company stated it does not agree with all the conclusions made in the decision, and that many practices cited had been long since revised and/or discontinued. Senator Warren cites the Karu ruling in her March 23 letter and asks whether Beast Industries intends to allow Step users to invest in or hold cryptocurrency or NFTs, and whether Donaldson intends to mention Step in future YouTube videos. Those questions have not been publicly answered. Step's cryptocurrency history is documented in Warren's letter across 4 pages of footnoted source material. In October 2022, Step announced it had become the first platform to allow teens, with the consent of a parent or guardian, to responsibly participate firsthand in the rapidly evolving investing landscape, starting with buying and selling Bitcoin. The same month, Step closed a $300 million funding round. Step published a YouTube video that year titled "How to Talk to Your Parents About Investing in Crypto," produced for users whose parents want nothing to do with crypto. The video provided scripts, suggested phrasing, and at one point advised viewers to throw in something relatable like, "Mom, you've had Apple stock forever. Bitcoin has just as much potential." Near the end, it advised going in for the kill. That video was produced before Beast Industries owned Step. By May 2024, Step had closed all crypto investing accounts and liquidated remaining positions. Beast Industries has said it is still evaluating its plans for the app. That is the full extent of the public record. Here is the question the paper trail cannot answer, one that, as of the date this script was written, remains open. What regulatory framework governs a creator economy conglomerate that operates regulated financial products to the same audience it built through entertainment content? This is not a hypothetical. It is the current situation. The FTC has rules governing advertising disclosures, including for financial products. COPPA governs data collection. Banking regulators, the Federal Reserve, the FDIC, the OCC, have capital requirements, compliance frameworks, and examination authority over the institutions they supervise. FINRA and the SEC govern registered investment advisors and broker-dealers. None of those frameworks were written for the specific situation where the world's most subscribed YouTube channel and a consumer banking platform are owned by the same entity, backed by an Ethereum treasury company, with a trademark filed for cryptocurrency trading services. There is no rule that says Jimmy Donaldson cannot mention STEP in a YouTube video. There is no rule that says Beast Industries must disclose, in the way a registered investment advisor would, any financial interest it holds when promoting financial products to its audience. There is no rule either that has been written, yet, for a platform that functions simultaneously as entertainment content, advertising vehicle, and banking distribution channel. The Honey browser extension lawsuit, filed against PayPal in January 2025, is at its core a case about what happens when a financial mechanism operates in a space the law has not yet caught up to. The SPAC structure that took FaZe Clan from a creator collective to a $725 million valuation, and then to a $17 million acquisition price 3 years later, exploited the same kind of gap. In each case, the pattern is the same. A mechanism runs. The regulatory structure either arrives late or does not arrive. And the accountability gap does what it always does. It speaks for itself. Beast Industries is not FaZe Clan. MrBeast has built a company with real operating revenue, institutional backing, and a management team hired specifically to build professional compliance infrastructure. Feastables, at $215 million in annual revenue, is a real business. Beast Games is the most watched unscripted series in Amazon Prime Video's history. The philanthropic work is documented and real. None of that is in dispute. What is also not in dispute is the sequence of events between January 15th and March 23rd, 2026. A $200 million crypto investment, a banking acquisition, an insider trading referral to federal regulators, 11 unanswered questions from the Senate Banking Committee. Senator Warren asked those questions with a deadline of April 3rd, 2026. She asked whether Beast Industries intends to reintroduce crypto to STEP's platform. She asked how Beast Industries plans to protect user funds if Evolve experiences future liquidity issues. She asked why STEP chose to partner with a bank already subject to a Federal Reserve enforcement action and a data breach. She asked whether Donaldson intends to promote STEP in his YouTube videos. She asked in question 7 why Beast Industries filed a trademark for MrBeast Financial, and what the DeFi reference in House and Bold's January statement was specifically referring to. No public answer has been filed. The mechanism is assembled. The regulatory framework to govern it has not been written. The audience has already been built. 491 million subscribers and counting, whose trust was earned through viral challenges, philanthropic stunts, and chocolate bars. Whether that trust is about to be extended to a banking platform, and under what rules, with what disclosures, backed by what oversight, is the question the paper trail opens and cannot close. That question is now sitting on a desk in the Senate Banking Committee. The deadline was April 3rd, 2026.